there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, emerging market stocks were set to snap a four-day losing run as, of course, cautious optimism crept into markets ahead of the start of the U.S. Fed's two-day meeting. MSCI's Developing World Stocks Index rose about 0.4% on the day. On the continent, a gloomy day. However, we did see South Africa's JSE up slightly on the day, benefiting from marginally firmer global markets and a firmer rand. Now, also coming up on the show, Egypt's oldest cement company cuts production and could face liquidation. Facebook plans to launch its own Libra cryptocurrency. And South African township residents learn coding skills to embrace the digital era. Well, let's start off the show in Egypt, where cement producer Tura Cement says it has stopped production, and that's due to a financial crisis caused by an oversupply in its domestic market. According to the firm's managing director, the company estimates that its cement consumption this year will end at around 50 million tons. That's compared to all its competitors' total capacities of about 85 million tons. Now, Tura, which is a subsidiary of Germany's Heidelberg Cement, is currently drowning in about $48 million worth of debt, and it could resort to liquidation. The Egyptian cement industry has been experiencing mixed fortunes in the last few years due to the rising oil prices in the country as the government pushes to reduce its subsidiaries. Well, let's find out more about the fate of the firm from Yasser Hakim. He joins us now in Cairo. Yasser, great to have you on the show. Now, the firm has accumulated almost 50 million US dollars in debt. Its management is now contemplating liquidation, as we mentioned. Take us through what has led to the company's current situation.
Yes, Uche, obviously, like you said earlier, the total consumption in Egypt was around 50 million tons per year, while production has jumped to 85 million tons per year. If you look at the surplus of production, it's equivalent to a whole year's consumption in countries like South Africa, Spain, and Morocco. So that's a huge amount, and the government and the companies could not at the same time try to find any way to export because of the higher prices of exports, non-competitive prices of Egyptian exports, especially that with the cuts in subsidies and higher energy prices in the last few years because of the economic reforms, this increased the cost of production. Then you have another problem is that the market itself, the real estate market, has slowed down against expectations a few years ago that the market would be booming. It slowed down in the last couple of years, and this has obviously affected demand. One final also aspect is that a huge cement factory called Al Arish Cement, that's in Upper Egypt, in northern Sinai, that alone has been producing 13 million tons per year. Out of 50 million, that's the total consumption, 13 million alone from one factory, and this has obviously led to a huge supply that has led that obviously caused the problems, and that's why they have tried to lower the prices, and when they lower the prices, they're losing profit. There's no profit, and that led to the situation we're at now.
Right. Well, interesting fact, Yasser, is that Tura Cement is actually Egypt's oldest cement company. Now, given what you just said, that the cement market in Egypt is currently oversupplied, what do you expect will be the fate of the company going forward? Is there any hope of financial assistance?
Now, the board of the cement factory has been trying in the last few months to change the policies. They tried to lower or reduce production, reduce shifts for the employees. However, they have also found that it's a deadlock, that they could not continue as it is. The losses are huge. The owners, shareholders have lost half of their value of what they have put into the cement factory, and they do not want to lose any more. And that's why they announced that they would be probably liquidating the factory. It's the oldest factory in Egypt, the first cement factory in Egypt, built in 1927. And at the same time, will the government intervene? Now, nothing from the government yet, no reaction from the government so far. The Tura Cement was actually a state-owned factory before, and it had incurred a lot of losses, and it was sold to Heidelberg, which was supposed to be administrating the factory to be more productive and more profitable. However, obviously the plans did not go as hoped for, and it has continued its losses, and therefore the only way out is probably for the government to intervene at this moment, and we'll see if the government would help out.
Well, this all doesn't paint a positive picture for Egypt's cement sector going forward. As you mentioned, there's oversupply. Experts are also complaining that they're not exporting cement because their prices are not as competitive as countries such as Saudi Arabia and Turkey. So what is the outlook, Yasser, for the building materials industry in the country going forward?
Obviously, it's a slowdown in all, because there were expectations around 5 or 6 years ago that the real estate will be booming. In the last 2 years, because of the economic reforms, the devaluation of the Egyptian pound, the prices of real estate, apartments and so forth, and housing units had more than doubled, which obviously led to Egyptians not buying or demand for housing units has dropped a lot because of the devaluation of the Egyptian pound. At the same time, the energy cost has increased. Cuts and subsidies of energy has been going on for the last 2 years, which increased prices. So you have the cost of production is higher, the prices are higher, and no one is buying like before. Now these factories were building themselves, and they were increasing because of the expectations before, the potential of the market. Now they found out after starting production that the market is slowing down. They resorted to exports, two main markets that they were hoping would be a good market for them, and were, according to the plans, were supposed to be the main markets, are Libya and Sudan. Unfortunately, obviously, because of the political instability in the last few years, those two markets have not been faring well, and there are no exports there. And like you said, it's not competitive with Saudi Arabia and other countries. So all these factors together have now led to a slowdown in the cement market in Egypt because of this real estate drop as well.
Right. Well, it's always great to have your insights, Yasser. Of course, that was Yasser Hakim joining us there in Cairo, Egypt. And moving on now, with Africa's population set to reach 2 billion by 2050, the continent requires an estimated 600 to 700 billion US dollars annually to fund development. While raising the funds remains a challenge, many of the countries on the continent are now seeking for creative ways of raising these finances. One of those initiatives is being spearheaded by the African Development Bank. The bank held its Kenya Roadshow to match projects with investors ahead of the second edition of the Africa Investment Forum, which of course will be in Johannesburg, South Africa. Here's CGTN's Penina Karibe with more.
A unique forum currently underway in Nairobi. It's a meeting of private investors convened by the African Development Bank, which is ramping up investment interest ahead of the second African Investment Forum to be held in South Africa later in November. The African Investment Forum provides an open platform to match projects in public and private sector with global investors. And in Nairobi, the private sector got insights of the numerous opportunities at hand.
It's estimated, depending on which numbers you look at, this infrastructure gap is anywhere from 68 billion to 180 billion annually for the next 10 years.
The African Development Bank is championing the AIF as a platform to actively engage the private sector and to facilitate projects that have the ability to transform the continent. The private sector, however, has decried the level of red tape that stifles investment.
Many of the decision makers in the respective countries will be at this event. This will be an opportunity to also get a chance to speak to, whether you want to speak to the head of the ADB or the head of the Afrexim, the PTA, you name it, but also government officials, policymakers, regionally, at the country level. This is a good opportunity to meet with them.
The AIF promises to harmonize processes among the bank and its partners, reduce intermediation costs, and increase productive engagements between African governments and the private sector. African countries need low-cost financing for their development programs, and investment platforms such as the AIF are increasingly being seen as practical solutions to bridge that financial gap. Penina Karibe, CGTN, Nairobi, Kenya.
Now look at some of our corporate headlines today. Shareholders of Nigeria's leading cement manufacturer, Dangote Cement, have now approved a dividend payment of $756 million for the financial year ending December 31st, 2018. Now this translates to a dividend of about 16 naira per every 50 kobo share held by the shareholders of the company. Dangote Cement share price is currently trading at around 51 US cents on the Nigerian Stock Exchange. And NASPA's biggest shareholder is considering whether to reduce its $16.5 billion stake in Africa's biggest company. Now, the firm is concerned it's overexposed to a single stock. South Africa's government employees' pension fund is being encouraged by its manager, the Public Investment Corporation, to reduce its NASPA's shareholding of about 16%. And Ethiopia will split its state telecoms provider into two businesses before it is privatized. The move is a key part of the government's plan to open up one of the world's last major closed telecoms markets. Now, the government will split Ethio Telecom into two business units along infrastructure and the service sector. Now, Ethiopia could require as much as $2.2 billion to modernize its creaking, overburdened and telecom sector. And Carrefour will open its first store in Uganda this year. The French retailer is expanding in East Africa after a successful launch in neighboring Kenya in 2016. Now, the workers have already been hired ahead of the launch of the Kampala store. A second store in the Ugandan capital will be opened early next year. And that's a look at our corporate headlines. Well, we are heading into a short break now. Here's a look at what's still to come. We'll tell you why Vodacom has been suspended in the DRC. And a look at South Africa's booming wildlife industry.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Naidu. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Africa is the nexus of enterprise, and global business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN. Welcome back to Global Business Africa. Now, the use of internet in Africa has more than doubled in the last 5 years. Of course, the figure is still lower compared to the rest of the world, but hundreds of key players in the African and global internet industry are in the Ugandan capital of Kampala for this year's Africa Internet Summit. Here's CGTN's Isabel Nakiria reporting.
Making the internet accessible to a wider range of people living in Africa. Experts here say internet is an important tool to access education, skills or export products to the market. That's the focus this week for key players in the world of internet communication and technology. One priority, training internet engineers in different network systems to help make internet use affordable.
By us building capacity in people who build that infrastructure, we basically create more users and indirectly we will affect the price. So it's a chicken and egg thing. If you have enough engineers who can operate and build products and services on the internet, eventually the price will come down.
A recent survey shows sub-Saharan Africa has the lowest level of internet use of any region. The median use amongst the 6 countries surveyed was just 41%. Experts here say building internet infrastructure has helped increase connectivity in Uganda, which according to the Uganda Communications Commission, Uganda is ahead of other African countries in the race to get high-speed and reliable internet connectivity countrywide.
Recently, as government of Uganda, we have adopted a hybrid policy on the infrastructure to deliver broadband. We believe optic fiber can commonly take broadband to most parts of the country. But we also recognize it has limitations, optic fiber. It won't climb, it may not go to the mountains. It is prone to vandalism.
Restrictions on internet use was also a key point of discussion at the summit. Uganda and Tanzania have been criticized for the taxes they impose on internet users, which critics say discourage people from getting connected. The meeting here is encouraging internet engineers to create network solutions that will cause a positive impact on the use of internet. It's hoped this will, in the long run, reduce costs and increase usage. Isabel Nakiria, CGTN, Kampala.
Well, let's head to the Democratic Republic of Congo now, where a court has upheld a government decision to suspend Vodacom's 2G telecoms license in the country. Now, the suspension does not affect the firm's 3G or 4G licenses. It is not clear how many of its 12 million customers only have access to its 2G coverage. The Council of State ruled that Vodacom DRC must wait about 3 months to challenge the ministry's decision. But of course, the ministry still insists the cost of renewing the license is about $65 million, not the $16 million Vodacom had already paid in 2015. Well, let's get some more insight into the impact of this decision. We're joined by Chris Ochamringa in Kinshasa now. Chris, great to have you on the show. Now, though we did see the court uphold this suspension, it does not affect Vodacom's 3G or 4G licenses in the country. So exactly how significant is this decision to the company's operations and services in the DRC? Well, it looks like we have a poor signal there. We'll try to get it back for you if it's possible. Well, let's move on in the meantime to South Africa. The country's wildlife farming industry has grown exponentially over the past 20 years, from about 3,500 farms in 1992 to over 10,000 game farms in 2019. Now, the biodiversity and infrastructure has offered the country a unique competitive advantage in an industry which is currently contributing over $1.5 billion to its GDP per year. Well, CGTN's Laura Walubengo gives us the details.
Thousands of tourists visit South Africa every year to experience the thrill of wildlife hunting. The industry has mushroomed over the years due to the various types of prey it offers.
Hunting in South Africa has many more variety of animals, much different than what we have in the United States. So it's a much different style of hunting in the United States. Well, where we're from, we have more mountainous, more mountain animals, more mountainous country, longer shots, but everything's much slower. African hunting is maybe a little bit shorter, but much faster.
It consists of 4 key pillars: live sale auctions of game, ecotourism, hunting and animal products. Trophy hunting generates an estimated $693.8 million a year. In 1991, a law was passed allowing private ownership of game animals. This allowed transitioning from cattle ranching to game farming.
Well, it's the only industry that South Africa has a unique comparative advantages in terms of the nature of the species that we farm with, as well as the natural biodiversity of South Africa being the 3rd most biodiverse country in the world.
There's still a huge premium paid for your top-end genetics. You know, we saw Horizon, the Buffalo Bull, sold earlier this year for a 3/4 share for 90 million. We've seen sable cows selling for well over 200 and 300,000 this year already, and buffalo cows early on this year at a signature wildlife auction for the 4 million mark. So there's still a lot of money out there to be paid for your superior genetics, and I expect that trend to continue through this year.
Game meat is also a reliable source of income for the country. Much of the meat is turned into biltong, the fabled South African dried meat snack. It contributes $579.3 million annually, despite many hunters not opting for trophies.
I think people want to eat healthier, but they don't know how to prepare. So biltong for them, venison biltong, is a healthy source for them.
Biltong is healthy. It's got a really nice flavor, and it's an easy to eat snack. So you can just eat it any time. You can substitute it for a meal. It's really just a good South African snack. That's like our own.
Game farmers are now pushing for legislation that will allow them to slaughter game on their farms, a move that is predicted will increase production for both domestic and international markets. Laura Walubengo, CGTN.
Well, let's briefly go back to our top story, where a DRC court upheld the suspension of Vodacom's 2G Telkom's license in the country. We're joined again by Chris Ochamringa in Kinshasa, this time by phone. Chris, great to have you back on the show. Now, though we did see the court uphold this suspension of Vodacom's 2G license, it still doesn't affect the company's 3G or 4G licenses in the country. So how significant will this be for the company's operations and services in the country going forward? Well, certainly looks like we still have problems with the audio there. We'll try to get Chris back as soon as we can. Well, let's move on once again. Well, let's head to Ethiopia. Now that the Africa Continental Free Trade Area is well on track and is ready for a ground implementation, efforts are being seen across AU's platforms aimed at guaranteeing success. Now, the African Union Commission is working closely with member states to develop land, air and maritime infrastructure in order to boost intra-Africa trade. Well, CGTN's Girum Chala gives us the details.
It's over 1.2 billion people who will benefit from the Continental Free Trade Area, which represents a GDP of $3.4 trillion US. Now, with the ratification by 24 member states, the AU is set to put the AfCFTA into operation. However, some worry that the huge infrastructure gap will jeopardize the full implementation of the free trade zone. The African Union says it is working with its member states to bridge the gap.
We are working with the relevant organizations and partners in order to ensure that our airports are updated, upgraded, the infrastructure is up to date, the safety and security measures are taken into consideration and abiding to international standards. We are pushing also through our PIDA program, the Program for Infrastructure Development on the railways and the road and also maritime transport.
The other key area the African Union says it's working on to hasten implementation of the free trade deal is the digital infrastructure across Africa.
We are leading on the continent for the continental strategy for digital transformation in all sectors, and particularly in sectors that support the free trade area. And we are working with different partners on e-commerce platforms, and these are excellent ways also to market and to show and to sell and buy our products and to promote our SMEs and young people working in that area.
Commissioner Abu Zaid also said Africa is busy engaging its IT professionals and international stakeholders in enhancing cybersecurity across the continent.
Again, to ensure all these transactions, all what's happening on the continent is happening in a safe and secure way, and that our data is protected, the transactions are protected. We are rolling out, our cybersecurity program across the continent.
In just a couple of weeks' time, the African Union Heads of State gathering will take place in Niamey, Niger. The leaders are expected to officially launch the AfCFTA operations. As much as it is an exciting moment for the African continent, several administrative hurdles need to be cleared to ensure a smooth implementation of the trade deal. Group Dala CTN at the African Union headquarters in Addis Ababa.
And let's head to Somalia now, where the government plans to embark on a major road renovation project after it secured funding from the European Union. CGTN's Abdulaziz Bilo reports from Mogadishu that this project is expected to change the lives of people in the country.
This is the state of roads in most major cities in southern central regions of Somalia. Decades of conflict has virtually destroyed the road network system, making them impassable. Mogadishu is now seeking funds to renovate basic infrastructure and connect cities across the country through a European Union-funded program.
This financial agreement, it is about that. It is about rehabilitating roads, making ordinary Somali citizens' lives more easier, and trying also to shorten the time, from Bosaso to Beledweyne or to Galkayo or to Beledweyne to Mogadishu. The idea in this, with this about 60 million euros, 42 coming from the EU and 18 coming from the African Development Bank, as you know, it will rehabilitate 350 kilometers.
The project is set to be implemented for a period of 48 months. Lack of maintenance, conflict and heavy rains have been attributed as some of the causes of the poor road network in the Horn of African nation. But the government hopes that this latest project will change all that.
Through this program, the management of the nation's road sector will be ameliorated on a regional level to improve the links between cities around the country. Additionally, the program's dedicated roads corridor will strengthen the capacities of both federal and regional institutions to better manage the road infrastructure.
This is the main road that links the Somali capital Mogadishu and the Lower Shabelle region, widely considered as the breadbasket of the nation. Public transport is the only means available for thousands who commute to the capital each day to trade mostly in farm produce. In 2017, the Somali government has signed a multi-million-dollar deal with the Qatari government to renovate more than a 100-kilometer stretch of road linking Mogadishu to the Middle and Lower Shabelle region. The project was set to be implemented by a Turkish company at a cost of over $200 million. But 2 years later, nothing tangible has been done.
We pay taxes both to Mogadishu and to the Southwest administration, but we get nothing out of it. As drivers, we hope this time the government will fulfill its promises and renovate the main road to Afgoye.
As public transport drivers, it takes us 1.5 hours to reach Afgoye from Zobe. But if the roads are good, it will take us a maximum of 30 minutes. We want the road renovated as taxpayers.
For now, locals have expressed renewed optimism following the latest agreement with the European Union, a move they hope will boost movement and trade for a country emerging from decades of conflict and instability. Abdulaziz Bilo, CGTN, Mogadishu, Somalia.
You're watching Global Business Africa. Let's take a quick break now, still to come. Facebook is venturing into the cryptocurrency world. And Norway is going electric in the air, on the roads, as well as the sea.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
For lucrative economic data out of the country, the country's foreign currency reserves.
With a dedicated and diverse team of anchors, CGTN now brings Africa to the palm of your hand.
I'm Perina Karibe in the heart of Nairobi, which is bustling.
From everyday heroes to the continent's most powerful figures, we bring their voices to you.
We haven't changed, and this is something most of us are very excited about.
We bring you news that's changing perspectives.
I'm Uche Okoronkwo reporting from Nairobi's city center.
News that brings Africa to the world. CGTN. See the difference. How will your world change today? What happens here? What happens there? Or what you make happen for yourself. If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Just about 1:30, let's recap today's headlines. Former Egyptian President Mohamed Morsi has been buried in a small family ceremony in Cairo, a day after he collapsed and died in court following a fatal heart attack. Now, Morsi was the first democratically elected head of state in Egypt's modern history. At least 161 people have been killed in a northeastern province of the DRC in the past week. The violence is an apparent resurgence of ethnic clashes between farming and herding communities in the country. And finally, in Nigeria, the government has welcomed a report by the European Union Observation Mission on the country's general election, which was held earlier this year. President Muhammadu Buhari has promised to analyze and act on the in the best interests of. And that's a recap of today's headlines. And on the international front, Facebook has finally revealed the details of its cryptocurrency Libra. Now, according to the social media firm, Libra will let you buy things or send money to people with nearly zero fees. You'll pseudonymously buy or cash out your Libra online or at a local exchange points like grocery stores. You can then spend it using third-party wallet apps or Facebook's own Calibra wallet that will be built into WhatsApp, Messenger, and its own app Facebook. Now, the company released its white paper explaining Libra and its testnet for working out the kinks of its blockchain system before a public launch in the first half of 2020. Well, let's delve further into this with Leah Duncan. She joins us now in New York. Leah, great to have you on the show. Now, this Libra cryptocurrency is not exactly a speculative currency such as Bitcoin. So how exactly does Mark Zuckerberg say this will work?
Well, Facebook is just one of the latest companies to dabble in this space, but it's, of course, a Silicon Valley giant that reaches billions of people around the world. So there's understandably a lot of buzz around Libra. So here's what we know about how it will work. Libra will be a digital currency backed by a reserve of real-world assets, including bank deposits and short-term government securities, and held by a network of custodians. Libra transactions will be powered and recorded by a blockchain, that is, which is a shared ledger of transactions maintained by a network of computers, and the blockchain will be permissioned, which means that only parties that are authorized by the governing association will be able to actually run computers, which makes it different from Bitcoin, which, as we know, does not have a governing body. Now, Facebook also created Calibra, a subsidiary which will offer digital wallets connected to messaging platforms, Messenger and WhatsApp, where users could save, send, and spend Libras. Calibra will also be available as a standalone app on smartphones. Now, the plan is eventually to make Calibra also available for transactions on apps such as Instagram, where transactions such as digital checkouts for purchases can occur. As for privacy, which is a big issue, as we know, it says that everyone who uses Calibra will have to go through a know your customer process, which verifies user identities to help prevent financial crimes.
Now, of course, this project, it has raised all sorts of concerns for regulators, from antitrust issues to the threat that this new app might pose to financial stability. So, Leah, what are the key concerns for regulators and how are they responding to this?
Yeah, so I briefly touched on privacy worries, which is, of course, a top issue. Facebook is, of course, not the most trusted name when it comes to consumer privacy. Some have called on the company to incur penalties or to be broken up for mishandling user data and allowing troubling material to appear on its site. So I think some people might be having a hard time making sense of why a company like this that has had the troubles that it has had wants to move into this space. But Facebook is saying, hey, we have more than 2 billion users, so it's betting that it can squeeze revenue out of its messaging services through transactions and payments, something already happening on Chinese social apps like WeChat. Now, Facebook says it's planning to launch Libra in the first half of next year, as we know. But I spoke to a Reuters financial technology correspondent, and she says it may take much longer than they're thinking to get the regulatory buy-in that they need. And there's also a chance that consumer privacy concerns or regulatory hurdles may completely prevent the launch from even taking place altogether. Now, today, we heard from Bank of England Governor Mark Carney, who met with Mark Zuckerberg earlier this year. He said that he is keeping an open mind on Facebook's planned cryptocurrency, but he warned it may face strict regulation if it does indeed take off. Carney also said regulators would have to look at such currencies' operational resilience and their anti-money laundering and counter-terrorist financing procedures. Meanwhile, the French finance minister also commented on the issue, saying, quote, "This instrument for transactions will allow Facebook to collect millions and millions of data, which strengthens my conviction that there is a need to regulate the digital giants." The minister said that he asked the heads of the central banks of G7 countries to write a report on the issue by the middle of July. And finally, we also heard from U.S. Senator Mark Warner, a Virginia Democrat who sits on the Senate Banking Committee. He expressed concern that through Libra, Facebook was using its scale in social networking to achieve dominance in adjacent markets like mobile payments. So certainly a lot of questions and concerns being raised here.
Right, and it's certainly, you can certainly understand their concerns, because this project feels like it's a Facebook-led project. But of course, Zuckerberg has come out and said that he will be unveiling a group of partners, companies such as Uber, Spotify, MasterCard. Their names have come up. So what do we know so far about that?
That's right. Well, this so-called Libra Association is a 28-member independent non-profit that is based in Geneva, Switzerland, and it will oversee major decisions. The aim is to get to 100 members by the time Libra is actually launched. Members include the likes of credit card companies like Master and Visa, Spotify Technology, PayPal, eBay, Uber, and Vodafone. They are all on that list. There are also some venture capital firms on the list as well. Now, companies are required to make a minimum $10 million investment to join, but there's an exception for nonprofit members. Each member will get one vote on important issues. And after 2019, Facebook is not planning on maintaining a leadership role. Now, despite some of the big names that I mentioned there, a big missing piece is there are no banks among the inaugural members. We know that there have been some discussion with lenders, but there appears to be some caution from banks as they are perhaps waiting to see how regulators and consumers respond to Libra first. And one point that I also want to note is we don't have big names such as Amazon and Alphabet on board, at least as of yet. So getting, buy-in for those companies as well from those companies like Amazon and Alphabet, that is, might really go a long way as far as convincing some folks. But I would also say that some people are viewing this approach by Facebook to partner with others as an acknowledgement that it is not the most trusted name when it comes to consumer privacy right now. And just taking a quick look at the stock, it opened higher in the session today, but it has since given up those gains.
Well, many thanks, Leah, for that update on the new project. Of course, that's Leah Duncan joining us there in New York. Well, let's move on now. Trade between China and Russia was worth more than $100 billion in 2018, and the two countries expect it to double in the next few years. Cross-border e-commerce still accounts for only a small portion of this, but CGTN's Fang Yilei has been talking with industry insiders who hope for strong growth in the sector.
Clothes, electronics, and other popular made-in-China goods. This specially established international logistics center in Harbin handles more than 20,000 small parcels a day. Within a few weeks, they will reach their buyers, who have ordered from Chinese merchants online across the vast territory of Russia. It is one of many signs of booming e-commerce between the two countries.
Russian consumers used to shop on US or European e-commerce platforms, but now most of them use Chinese ones like Alibaba. But there are problems that still need to be tackled. Chinese goods sold to Russia account for the vast majority of the total China-Russia e-commerce turnover.
Many see a bright future as China-Russia cross-border e-commerce hit $3.7 billion, up more than 20% year-on-year in the first 3 quarters last year. At this year's China-Russia Expo, experts from both sides come together to exchange experience to better exploit the market potential. And their primary task is to face the challenges.
We realize that imported Russian products are mostly prepackaged food with limited profit margin. Popular Russian meat and dairy products still face import restrictions. Household chemicals have long import procedures and low brand awareness. Besides, only very few goods meet shelf-ready criteria of big Chinese e-commerce platforms.
Traders want a more favorable environment. Last year, China and Russia signed a memorandum of understanding to establish a bilateral e-commerce cooperation mechanism. At a local level, Harbin has also been green-lighted as one of the cities to establish cross-border e-commerce pilot zones.
Traders can stock up in advance in our bound zone to shorten logistics times and enable domestic consumers to experience the products here. Tax relief policies on relevant enterprises and a wild list applied for e-commerce goods contribute to lower prices and a bigger variety of products. And more efficient customs clearance will allow consumers to get their orders very soon.
E-commerce giants also seek to work more closely with local operators with know-how in product updates, cost control, supply chain and promotions.
And on the platform of the China-Russia Expo, many deals have been made among players in the field of cross-border e-commerce to further develop their business models and expand businesses. All these are expected to enable consumers to buy from around the world quicker and cheaper with just one click. Feng Yilei, CGTN, Harbin.
Now, traveling while keeping an eye on your carbon footprint can still be a daunting task. Can you justify that long-haul flight for this year's summer holiday? Is it time to sell the diesel car and go electric? Some of these tough choices may become easier for some of us sooner than we think. And CGTN's Guy Henderson tells us why from Norway.
Here we go.
It is the world's first commercially available electric plane. And veteran pilot Helge Storflor is taking me for a spin above Oslo in the Alpha G2.
Incredibly easy to fly.
There's only one of them in the whole of Norway now, and it has its limitations.
This one can fly for 1 hour, and then you need to charge for 1 hour.
Okay.
So,
and how far does that get you?
Typically cruising speed on this one will be 85 knots, which is like 160 kilometers per hour.
Okay.
And 1 hour's flying will take you 160 kilometers.
That's still pretty handy in a country with more than 50,000 islands. Insufficient, though, to meet an ambitious target.
Norway wants to make all of its domestic flights fully electric by the year 2040. It's all part of a radical plan for the country to reduce its carbon emissions. One potential issue springs to mind, however. There's not too much room for any more passengers in this aircraft.
That looks likely to change as big firms spy new opportunities.
Siemens and Airbus, they expect to be able to fly 100 people, 100 kilometers by 2030.
And Norway has a track record of delivering. Successive governments set similar goals on the roads. There are now more electric cars per person here than any other country. That happened quickly, says the head of the Electric Vehicle Association.
In 2012, 3% of new car sales were electric. So far this year, it's close to 50%.
So Christina Boo believes the latest target to sell only zero-emissions vehicles by 2025 is realistic.
Thing to learn from Norway is that consumers might be skeptic at some point and not understand it's new thing, but we've sort of had a collective shift in our mindset.
Now both Norway and neighbouring Sweden plan to slash their emissions at sea too. This is Konrad Bergstrom. A high-profile Swedish entrepreneur who says it won't just be up to giant shipping firms to help meet those targets.
Recreational crafts were 26.3% of the carbon print, so it was higher than aircrafts.
This luxury speedboat, the Elex, goes on sale next year. Bergstrom says it's groundbreaking.
Now we actually have the technology to make the real change.
And so it is you guys are driving that in the marine sector. You would say that
we're definitely the number one for sure.
Low emission mass travel might be closer than you think. Guy Henderson, CGTN, Scandinavia.
And shifting focus now, here's a quick look at how commodities performed today. Oil prices falling for a second day on signs that global economic growth is, of course, being hit by the US-China trade war. Of course, we did see losses capped by Middle East tensions after last week's tanker attacks. Meanwhile, gold prices edging higher today as the dollar pulled back from multi-week highs, and that's, of course, ahead of the US Fed's two-day monetary policy meeting. Well, let's head into a quick break now. Here's a look at what's coming up. South African township residents embrace the digital era. And Egypt launches 3 new metro stations in Cairo.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
Welcome back. Now, new developments around automation and artificial intelligence, they're transforming business in South Africa and around the world. It's already being used in industries such as engineering, finance and manufacturing. But South Africa's workforce still lacks those skills to fully embrace the digital era. Now, a 2-day coding conference was recently held in Johannesburg Township to make people aware of the 4th Industrial Revolution and its implications for the workforce. Here's CGTN's Julie Shire reporting.
Machine learning development or coding is rapidly becoming one of the most sought-after skill sets in the business world. But it's in short supply in the South African market.
One of the biggest challenges is to find these skills. What we're now doing is that we're trying to build, we're trying to create, we're trying to educate, as well as also upskilling the current people that would then speak to what the current technology space is all about right now.
A 2-day coding conference was recently held, targeting youngsters from townships and informal areas with limited exposure to technology.
We don't really have access to these kind of things, so it's very difficult for us to get information on these things. When you're in the township, I'm not in school, and the requirements of going to study these things at universities is obviously something I don't have. So I think this is another way of me venturing into technology.
According to a 2018 McKinsey report, 45% of business tasks will soon be automated. It's already been integrated into assembly lines and sectors such as engineering and financial services.
It is very important that we bring such awareness into the township so that people that are in the LSM1, the low-income earner people, can know about the technology and what is going to happen to their routine job. You can teach a machine, a computer, how to perform certain tasks, and even better, than human being, and hence businesses are going into it.
Rather than viewing it as a space where we will be replaced by robots, rather we need to view it as a space where who will design the robot thinking. And that space, the reason why it's so important is because if we don't fill that space, we will forever be left behind as a country.
Coding will be piloted in South Africa's public schools from next year, but it's already transforming our daily lives and being used to create solutions to challenges faced in communities. Julie Shire, CGTN, Johannesburg, South Africa.
Meanwhile, Egypt's Transportation Ministry has opened 3 new metro stations in the capital. These stations are the first inaugurated stops within the scope of Cairo's metro's third line expansion. Now, they come less than a week before the kickoff of this year's African Cup of Nations, which will be held in Cairo and 3 other Egyptian cities. Here's CGTN's Yasser Hakim with the details.
It's the latest addition to the transportation sector in Egypt. The latest phase are 3 new underground stations on Line 3 in East Cairo.
For rolling stock of the new phase, it will be air-conditioned on the optimum specifications of rolling stock all over the world. I believe it will take about 150,000 passengers per day. So it will be added value to increase the passengers from to eastern of Cairo.
The construction started in 2015 and has cost around $400 million. It supports the growing number of passengers for the metro and is linking east to West Cairo.
We increase the ticketing windows. We put a machine for ticketing if the windows are a little bit crowded. The time interval between the rolling stock is about 4 to 5 minutes. The whole trip may take less than 15 to 20 minutes from the end station in Al Maskan to Stadium Station.
The capital, Cairo, is overcrowded with a population of more than 20 million people. Traffic congestion is an everyday burden, which is why the underground is seen as the ideal form of transportation.
It's very good. I use the metro in my daily trips to work. It's easier, faster and more comfortable to use, especially during the rush hours.
It is very important. The new lines will facilitate our movements even more. In the metro, there's no congestion, no traffic lights, no headache like other public transportation.
The timing of this inauguration is also important as it comes just a week before the African Nations Cup and will help very much in the transportation of fans throughout the different matches. Yes, Hakim for CGTN, Cairo.
Now, before we go, let's take a quick look at Africa's currencies today. We saw Kenya's shilling forecast to weaken against the US dollar, and that's due to excess liquidity on the country's money markets. Meanwhile, South Africa's rand firmer against major global currencies. It was also at its best level in 2 weeks against the dollar. Of course, it was bolstered by signs of dovishness from the European Central Bank. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and of course the